Hello dear students, welcome to Devika's Commerce and Management Academy. So introduction class I have given you about the financial markets. If you have an understanding about financial market, we'll go ahead in the further classes. Before going to the class, let me tell you all, this is an education channel. Please do support by sharing these videos, by liking and commenting. I need your support, then only I can continue. So anyway, today we'll see related to the financial markets, mainly the capital market, money market, primary market, secondary market. Related to these four markets, the difference we'll see. Then you get a very good understanding. So what kind of markets are there? What is the difference between capital market, money market, primary market and secondary market? All these things you'll come to know. If you have followed the first class, then only come to this class. It will be easy for you. But today's class will give you a clear-cut idea about these markets. I'm sure. Stay connected. So let's focus on the first, money market and capital market. Money market, as I have told you in the last class, it's related to the only the short term and there is a security and also liquidity will be there. Somewhat we have learned, right? So if you see the differences between money market and capital market, there are many differences. Total 10 differences are there. What are they? First thing is that money market is short term finance. Short term means 1 year below. 1 year below, if you want any money, credit money, then you can go for the money market. Whereas capital market is always long term finance, long term, more than 1 year. This is the major difference. Apart from that, so money market is here. Major players who are going to play the major role, major players are commercial banks, RBI, LIC, UTI, etc. Money market. But whereas in capital market, merchant bankers, financial institutions, foreign investment and individuals. These people are going to play the major role in capital market long term. Okay. Short term you can go for RBI, LIC, UTI, okay, and commercial banks also. And third difference is that money market is going to deal mainly the treasury bills and commercial papers and call money, etc. What are these? In the coming classes we are going to see, okay. And this capital market is going to deal with the shares, you know, preference shares, equity shares are there, shares, debentures, bonds and government securities. So it's dealing with these. And fourth difference is that money market is here engaged in working capital. We have seen in the last class, capital is of two types, working capital and also fixed capital. Money market is handling with the working capital. Working capital means it is for the day-to-day transactions. You want some money, that is working capital. And in capital market it is engaged with the fixed capital. Fixed capital means the capital which is used for the any fixed assets which is immovable like furniture, building, land, okay, that kind of things. So it is engaged with the fixed capital, capital market. And here another difference is that money market is high liquidity, easily encash it. Liquidity means which can be encashed. It is highly liquidity, but here low liquidity, very difficult because fixed. The capital which we are using is here fixed, so liquidity will be very less. And another difference is that money market is much safer and low risk. Short term, no, so we don't have much risk, low risk and also much safer also. But here this is not so safe. It depends most of the time, okay. Sometimes when you get a loss, huge losses, you will find it. And another difference is that money market cannot expect high returns. In money market you cannot expect high returns. When you are putting your investments in short term, can you expect returns? Not possible. Less returns you will get. Whereas in capital market, high returns means dividend, high dividend. So high dividend you can expect. Long term you are investing. When you are investing in long term, automatically the returns will be very high. high returns, high dividend you can expect it, but there here less dividend. And another difference is that instruments are high value, instruments in the sense investment. The instruments what we are using like commercial, where is that, treasure bills, commercial paper and call money, all these are high value, the value will be very high. But in capital market, face value of securities most of the time less face value, per share value 10 rupees, 100 rupees like that, that is very low. But whereas in money market, each paper, each commercial paper, everything will be very costly. So this is high value and this is low value. And another important thing is that this money market can be handled by or handled over phone or internet also. No need to meet any particular place. No need to meet any place. By internet, by over phone, by WhatsApp, you can just handle these things. You can just have a dealings. Need not to required to meet each other personally or any particular place is not required. But in capital market, it is not like that. It has to deal with market only. Through the market only you have to deal the transactions, not possible over the phone or net. So they have to go through the market. And last difference is that money market is regulated by RBI. We have learned in the last class, RBI is regulating this money market, whereas capital market is handling by the SEBI. Okay. So these are the major differences of money market and capital market. Next we will see primary market and secondary market. Let me give you a small recap. What we have learned related to the primary market and secondary market. Primary market is such a market where company can issue the shares. Issuing of shares, first issue of shares which is happening, which is going to take place in primary market. And in secondary market, already issued shares sell or purchase. Dealing of the issued shares, that is going to handle by the secondary market, or you can say which is handling the existing shares is by the secondary market, but primary market issuing it. That's the major point you have to remember about the primary market and then secondary market. Now we'll see the differences. Now if you see the primary market and different security market, secondary market, first thing is that issue of new shares. It is issuing new shares, and this is here marketing of existing shares already issued in primary market. Now that shares is going to handle in secondary market. That's we say it as a marketing of existing shares. Clear? They don't issue here. Here they issue. And second difference is that selling is here direct or intermediaries can sell the securities. Company wants to issue the shares. Directly they can issue, that's direct, or they can appoint the intermediaries, brokers, or intermediaries means bulls, stock exchange brokers, stock exchange intermediaries are there. They can appoint them, through them they can sell. Either they can go for direct or intermediary selling. But here, how do we do the selling? It's only exchange of securities. I have securities. I am exchanging with someone. Someone is giving to me. It's just exchanging, not exactly the selling. Okay. So that's exchange of securities. But here selling the first securities. And another important difference is that directly connected with promotion of capital information. This is directly connected with the promotion of capital, with the promotion of the capital formation. Okay. Want to enhance the capital, want to increase the capital. Simply issue the shares, issue the debentures. So that is directly you are issuing it. So that is why we are saying directly issuing, directly connected with promotion of capital formation. But here it is indirectly connected with promotion of capital formation, indirectly. Directly they are not selling it, but already sold securities will be exchanging. That is indirect. And another thing is that deals with buying and securities. Deals with buying and selling, buying of securities only, no selling, only buying the securities, right? So selling will be next stage it comes. Here buying and selling is going to take place. here buying and selling. Simply buying here because issuing first issue. Okay. Investors can buy the securities, but now here investors can buy, investors can sell, and dealers can buy, dealers can sell. Both the events are going to happen in secondary market. And another difference, it enables the management of the company to decide the value of securities. It enables the management to decide the value of securities. Management is going to decide the value of the securities. Say I want to issue some shares. What would be the price of the securities? What would be the price of the, I have to decide. How do I decide? I must search the first the existing companies, at what rate they have issued, and present supply, demand, how much is there, how can I expect, and to what rate if I issue the shares, people will come forward to buy my securities. Like all these things I have to do a simple survey. Then after that, price fixing is by myself only, means the company owner is going to decide the prices. That is what we are saying. It enables the management of the company to decide the value of the securities. And here no deciding, it is depending on the demand and supply. Demand and supply determines the price of securities. If supply is more, price will be less. If demand is more, securities price will increase. Demand supply rule, which we have learned in economics. Same simple formula we can apply it for secondary market. Am I clear? And last point is that no fixed geographical location, no geographical location. Anywhere you can handle this. Okay? But secondary market, existing securities, purchasing and selling can happen only in few places, that is located at specific places. Simply you have issued over, but selling and buying is taking at specific places. That is called as stock exchange. Many places you will find stock exchange, that is the only place where existing shares can buy and sell it. Am I clear? So please take a screenshot or note down. In the coming classes, we will go in depth of this commerce paper. Stay connected. Don't forget to share these videos, like and comment. Please do subscribe and refer this channel to your friends to support our channel. Take care and study well. Good luck.